Hello and welcome to this week's newscast from Power Engineering International. I'm Kelvin Ross. In this week's headlines, Greece faces having to sell off its electricity transmission network as part of its latest bailout deal. Staying with Greece, we examine the damaging effect the financial crisis is having on the country's biggest utility. And global investment in clean energy has dropped in the second quarter of this year. The latest Greek bailout deal includes a provision to privatise the country's electricity transmission network. The deal was drawn up on Monday, and among a raft of conditions that will allow it to go ahead is a requirement for Greece to sell off its electricity transmission network operator. It's not the first time the country's electricity sector has faced privatisation. 2 years ago, Greek officials drew up a plan to sell off 66% of the independent power transmission operator, known by its Greek acronym ADMI. 4 companies were in line to bid for ADMI: grid operators Turner from Italy, Elia from Belgium and the State Grid Corps of China, as well as a Canadian pension fund, PSP Investments. But the privatisation plan was put on hold in January following the election of Alexis Tsipras, and the following month the country's energy minister vowed that not one single privatisation will take place in the energy sector. However, a sell-off is now not just back on the table, but presented as a condition of the latest bailout. The financial crisis in Greece is having a debilitating effect on the country's biggest utility, PPC. With an increasing number of customers being unable to pay their utility bills, the company is said to be suffering a shortfall of about €20 million a day in revenue. This means it's having to rely on its cash reserves, with the knock-on effect that it's considering withholding a €200 million down payment for a new coal plant in order to free up funds. PCC is the biggest power producer and electricity supplier in Greece, with around 7.5 million customers. The company has assets in lignite mines, power generation and transmission and distribution. Earlier this year, it was reported that the company was facing unpaid bills worth around €1.9 billion, more than the market capitalisation of the company, which was put at just over €1 billion. Global investment in clean energy dipped in the second quarter of this year compared to the same period in 2014. A new report reveals that clean energy investment worldwide was $53 billion in the second quarter of 2015, down 28% on the $73 billion in the same period of 2014. The study from Bloomberg New Energy Finance states that the slump is because global investment this year is facing headwinds from the financial markets, with the sharp rise in the US currency over the last 12 months reducing the dollar value of deals struck in other countries. It adds that volatility in share prices, particularly in China, is holding back equity raising by specialist clean energy companies from both public market investors and venture capital and private equity funds. However, the report highlights that there have been some notable success stories in the second quarter. Small-scale solar enjoyed total investment of $20 billion, up 29% on 2014. And in Europe during the second quarter, there were 2 offshore wind deals that accounted for nearly $4.2 billion of investment between them: a 402 megawatt array off Germany and a 400 megawatt project off the UK. Of the total global investments in the second quarter, China was the biggest contributor with $15.5 billion, followed by the US, Japan, Germany and the UK. That's all for this week. Thanks for watching, and we'll see you again soon.